All right, reload the coffee. Looks like I accidentally killed my music. All right, let's get going in 2 minutes. Yeah. Seconds. All right, cool. Yeah. It's like a Trump rally. All right, let's get the going. All right, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. Nice to see you. Sip, sip, sip. It's good on the gums, I'm telling you. So what do you want to do today? Technical analysis, fundamental analysis? You bet. Let's do it. Let's burn through it. By the way, that scalp yesterday on the news worked, so very cool. So, today, not a lot on the calendar. But so be it. That's good. So anyways, let me know in the comments below how I can help. Ask your questions. If you want a particular pair or asset covered today, like gold, oil, Bitcoin, stock market, stock indices, you let me know, and I'm happy to do that. This is our hour of power, but you are in charge. I am a humble servant, so let me know how I can serve you. I guess I'll go over here. And before we get going, well, no, I guess we'll just leave that there. I received a couple of emails today. One was from QuantBox a couple hours ago at 5:58 a.m. It gave me an overnight summary of what's changed on QuantBox. Cool. So gold became a little more bullish. Euro dollar became a little more bullish. Cool. That's nice. That's a great summary over dozens of pages of work. This is the most important thing to be aware of. I also, 51 minutes ago, received an email from TRADARS. This is the daily email. This is kind of like a demo of TRADARS. This will be 61 cents a day. So it comes in at 6:15 in the morning. Gives you a little overview. Look, there's nothing on the calendar today. Nice to know. Just looking at all the performance of the symbols overnight. Gives you a good fresh start. And then there's a trade on Apple. There's a trade on Amazon. There's a trade on Google. There's a trade on Meta. There's a trade on NVIDIA. There's a trade on Kiwi dollar. There's a trade on USD yen. There's a trade on Ethereum. There's a trade on NASDAQ. There's a trade on FTSE. There's a trade on oil. And that's it. That's it. There wasn't anything else. And of course it says, hey, on Apple. Okay. Target for the next 2 hours. You'll notice on a 4-hour chart that there's a downward channel identified at this time. Channel down identified on the 11th of March at 16:30, so last night. This pattern is still in the process of forming. Possible bullish price movement towards the resistance at 174.78.5 within the next 2 days. It's watching RSI. Here's the main support line, 168.68. Okay, the last take profit of the down of the channel down. Very, very specific. It's beautiful. This is going to be 61 cents a day. Nice little update, right? So now you can say, let's see. Let's find a Forex one. Okay, So you can say, well, I'm going to go check this out. This one here. I can't highlight both at the same time. I'm going to go check out Kiwi Dollar. What? Hoorah! All right, cool. So let's go look at Kiwi Dollar. It sets you up to to focus on the right things. Let's do Kiwi Dollar. Kiwi Dollar on a 4-hour chart. Kiwi Dollar on a 4-hour chart. There's a break of support, a pullback of support, and a chance of down based on nothing but technical analysis. Broke through support level at 61.61. 61.61. Break it down, Bubba. Wait, am I on the wrong? I'm on the wrong one. No wonder. I'm like, what? I thought I clicked on the right one. This one. Okay, let's do, okay, I'm okay with the bearish. I'm okay. This needs to be a 4-hour chart. And maybe zoom in. Maybe we want monthly. So let's kill the old stuff. 61.61 is 61 right there. So traders is suggesting we take a look at this and that there's a role reversal and that it sees some sort of move this way down to about 61 as a get-going point. 61. Well, you can see it's a day trade. Oh, yeah. See, that's what I do all day, every day. The thing is, I would have missed it, huh? That's just a boring, simple day trade. So I can even trade it on a smaller time frame now. And 5A cross down, I'm in like Flynn. You see? Oh, God, it's gorgeous. See, I have it now. My target is 61.06, and it's suggesting 61.06. Shut the back door. So that's what I would do all day, every day, if I was a bear. The thing is, it gave me a heads up. I went through, and it created the same day trade plan, which I would have created last night. But it actually noticed the break, the pullback, and then created the technical analysis. Isn't that beautiful? Look at RSI, way overbought. Oh my God. I love it. It's sick. It's insane. Oh, snap. I mean, seriously, that is crazy. Oh, my neck is so busted up. My back is so busted up. Wow. I think that's worth 61 cents right there. Oh, that coffee's so good. It's amazing, isn't it? I'm dumbfounded. That's what I would do. And it just created the same trade plan that I would create. That, to me, is just ridiculously exciting. I honestly would create that exact same trade plan. That's exactly what I do. I would look at now this, the little roll reversal. And then I would probably do something like that and put my target here. I can go a little more conservative, but done. Done. That's what I would do if I were me. The interesting thing is its support. See, I would play it off of this. It's playing it off that, but I don't disagree with that. Um, cool. Oh man, that makes me so happy. You don't even understand how happy that makes me. I mean, it's actually doing my work for me. That's exactly what I would do. Here's a target. I think this is a trader's target too, isn't it? Right here. Yeah, how happy. You know, I mean, seriously, I know. I I would not like not understanding, right? Like, if it was coming up with trade plans I didn't understand, I don't think I could trust it. But over and over and over and over and over again, it's been showing me trade plans that, I mean, not all of them, but most of them are trade plans I would do. And then the next interesting thing is, well, what about the ones I wouldn't have done? It it's actually teaching me. If you think about it that way, where it gives you a trade plan, you're like, huh, really? So if you went and spent some time to figure it out, and right, and it's drawing some stuff, and it says, "Whoa, look at this and look at that," and you're like, "Really? I wouldn't do that." And then you pull it up and you watch, and you're like, and it works. Let's say you can learn from that. Okay, and it might end up making me a better trader, and that makes me uh, undescribably happy. Anyways, the fact that I understand and agree with it most of the time makes me more confident than I thought I would be. There you go. There's the honest, naked truth. Yeah. All right. So, anyways, here's an old trade plan. Looks like we just hit the trader's target. Cool. So that's another one done. 3 o'clock note. My WTI. So now the next one would be bring this around, and maybe tomorrow you catch it at 78 and a half, or later today, 78 and a half. What do you think? Anyone going to take this to 80? Richard, the demo will cost you 61 cents a day. This is the demo that I just did. That's going to be the demo. So what I just did is I pulled one off of the email and put it on my chart, verified it, confirmed it, agreed with it, and traded it. Okay? $19 a month. Well, look at today, it generated 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It created 11 trade plans today. Okay? On the website version, yes, it does. It tells you stops. Yes, it does. It tells you stops. It tells you targets. Yes. Anyways, so I'm going to try to send you an email today. But whatever. Yep. Richard says it's freaking neat. Yeah, it is. All right. I'm going to try today, but my developer overnight has really let me down. I mean, yes. So it's one human being's fault if we don't launch today. My goal is to be able to launch the email, at least to get the email out to you guys. Okay? Well, it's not doing fundamental analysis. But anyways, and by the way, it's not the developer of the technology. It's the front end. The front end person has really let me down. So at the bare minimum, my goal today is be able to launch the email version of Traders, so that you can see it, you can test it, you can compare, you can do all the things, and you can get used to what it does. And then maybe next month I'll launch the online version and do a proper presentation, and you can upgrade your account if you want. The second version of today would be because there's the online, there's the online membership where you log in and you get all the radars, and it's doing real-time analysis on like 50 things. And the back tester, what it does is show you, prove to you how it did its analysis. Right? Which is really cool. So when it tells you that this pattern has a 72% chance of success, where you're like, well, how does it do that? Right? Well, in the back tester, you can go to the back tester, you can go into the Forex section, you can go into the pattern section, and then you can pull up that one particular pattern, and it'll say, it's seen this pattern 1,722 times. And 72% of the time, it worked. How many people would like that level of detail where you can go check it out? You can find out which patterns work, which patterns don't work, to what percentage. How many people would like that? Me. Rising wedges have almost a 50-50. No, sorry, flags. Has anyone been trained to look for flag patterns that look like this? Up, down, up, down, up, down. Has anyone ever been trained on that by a guru? How many people have been trained on a flag pattern by some guru? Some guru genius. And the guru genius comes over and says, oh my God, well, you got to do this and you got to do that. Only 3 people? Yeah? 4 people? That's it? You don't know what a flag pattern is? Richard's got all the books. Do you want to know the reality of that? Well, first of all, let me ask you, what direction is this supposed to go? What have you been trained? MTI says Meta. Uh-huh. Never listen to any guru. I'm not a guru. I offer the truth. Remember, I don't even have I mean, I'm just really, I don't know. I don't have a thing, it's just, all right. Everyone says up. What if you knew after, I could pull it up now. I'm not going to have too many windows open. But what if I told you traders saw this 1,784 times? Is that enough of a data set for it to really truly understand this pattern? Is that enough? And what if it told you 54% of the time it worked? It's barely 50-50. What you were taught was bullshit. Your guru had no idea. They have no idea. They have no idea. And I can prove to you, right? I can prove to you it doesn't work consistently. It's random. It's random. And my AI can prove it to you. Do you know what works really good? Head and shoulders. And inverse head and shoulders. They work really well, by the way. Jim, I don't have the data in front of me, but I'll show you on the proper launch. But everyone with the online membership or subscription to traders will have the ability to go in the backtester and apply this analysis to, because that's Forex, but maybe in the stock market it does work. And so what happened is some guru used to trade stocks, and now he's pitching this pattern that works in stocks, he's pitching in Forex, but it doesn't work in Forex. Or maybe it works in commodities. So maybe it works on gold and oil, but it doesn't work in Forex and stocks. I can break it down to that level. But I can tell you, like head and shoulders patterns work really well. They're very reliable. And I can tell you how many times they have occurred, and I can tell you how many times they've worked. And then there's a percentage, obviously, right? And Richard says because the right shoulder's in 1, 2, 3. Yeah. Okay? So anyways, does it make me happy? Yes. Okay? Yes. Beyond belief. You're going to have so much granular detail about trading. You're going to be far beyond most. Far beyond most. All right. So let's go back here. Now, this is a collapse. What would I do if I were me? I would start to worry, okay? And I might actually start doing something like this. Okay, so there's the failed up. Remember, it's not a failed trade plan. It didn't go up. Something's changing. Maybe there's a key pivot. Maybe there's a key price, whatever. So now I got to go back and say, okay, I am worried about all of this stuff. And look at all the wicks that occurred around here. Up, collapse. Up, collapse. Up, collapse. Do you think there's some bears up here? Or a profit-taking zone? Do you think people don't want gold to go above 22? Well, then you got to go in, if that's what you think. I'm not thinking for you. Okay? You go into your bias pivots and you become a bear on this time frame. And maybe, just maybe, okay, and maybe you prefer Fibonacci. Look, it's the same thing. And Fibonacci, okay, a 382. Sorry, a 50% leads to a 1382, which is right there. It's the same thing as a pivot trade. So that might be my play of the day. Okay. Yeah, the 1 hour chart probably would already be bearish or rolling over there. I wouldn't call that, well, bearish because of the 2155. Yes. So could you be on a 5-minute chart with the finger on the trigger? Yeah. I mean, look, a 5-minute trader probably is already on this. I don't know. I don't know what you're doing. But at some point you have to decide when to become a bear. Maybe that giant bearish engulfing candle. Right? I'm not logged in. I have too much going on. But you know, like the email, for example, it's not highlighting that you should care about gold today, right? Let me zoom in for you. A lot of action in the stock market, but notice how they're different directions. QuantBox I covered this morning. I didn't upload the video though. So if you're not a QuantBox subscriber, too bad for you. See, a lot of these are little scalps and stuff. This is a little scalp on an hourly chart. So, you know, that doesn't excite me personally. But it's informative to think like that maybe that if this asset's been falling and then it consolidated and then it made a higher high, higher low, higher high, higher low, maybe it's going to work its way back up again, right? And so I might not be interested in the scalp, but I might be interested in the possible swing of the scalp turning into a spot turning into a swing. Or spot turning into a day trade turning into a swing. So I might like it just like, ooh, maybe this sucker's bottoming out and we're going to go back to 150. Okay? That's right. So I'm like, oh, okay. But it's a good way to just freshen up for the day, right? In the morning, you're like, okay, cool. Let's look at this. On the hourly chart, look at the higher high, higher low price action here. Okay, A to B, that makes sense to me. But what if we break above B and go to C? Like, that would be my thought, right? So I'd look at this, and this is what I would do if I were me. This is how I'd use the info. Let's do it a little thinner. I would say, I wonder if this is the future. Okay? And then this could be what I'm planning over the next day or so. See, I'm thinking forward. It's not doing my job. My job, I'm a portfolio manager. I make investment decisions. This is artificial intelligence that's acting like my technical analyst. A technical analyst is a low-level job. It's for the kids. So your analyst comes, "Oh, Mr. McDonald, I found these 11 trade setups last night. I think you should look at them." You're like, "Cool, go. Here's a Starbucks gift card. Go get yourself a coffee." And now, the adult now looks at it. And I look at him like, okay, well, I'm glad this intern, okay, spotted that higher high, higher low. That might not exist in a downtrend. So as the adult in the room, I'm like, cool, I might want to play this higher high, higher low. Maybe that zone ends up being, turns into a swing. And so that would be now the back of my mind. I'd be watching that and maybe potentially trading that. Right? So then I can say, if we breach the resistance, I buy a dip. Now that's boss mode, right? Are you the boss or the... Are you the boss or are you the... Are you the portfolio manager? Or do you take orders from the intern technical analyst that rode a skateboard to the office? Are you in a Bentley or on a skateboard? Which one are you? Okay? So you got to use the information right. No, that is not an inverse head and shoulders. No. Jakarta! Man, Jakarta would be I'd like to visit Jakarta and then maybe Kuala Lumpur. I don't think that's terribly far away. Not by airplane anyways. That'd be killer, right? And then I got to get back to Singapore. Once again, I think you could do a string. Yeah, I think you could probably visit those 3 cities in the same trip. But Jakarta, I'd love to check out. So maybe we can get together someday. I have a good friend, I believe he's in Kuala Lumpur, and I'd love to go visit him. Oh, man. Oh. I gotta get time, man. I need time. No, I mean, I would fly, but it'd be interesting to drive, I guess, wouldn't it? But all right. There's a good way to be stuck. I remember one time I was stuck in traffic in Dubai, and sometimes the freeway there, everything is a straight line. So if there's a problem, everybody's stuck. But I was in a Rolls Royce. Yeah, it was pretty cool. So my feet were up. I was having a drink. I was listening to I remember they gave me a catalog of music I could listen to. I forget. I can hear it, but I can't remember. It was like Enya or something. Listening to Enya, stuck in traffic in Dubai in my Rolls Royce. Yeah, and I'm like, hey, it could be worse. All right. So, anyways, cool, right? Cool. Okay. So, as a reminder, we're looking for price action to this way. Yeah, I would like to. I don't have any plans, but it is a place I would like to visit. Cool. Okay. Again, are you recognizing this as up? Are you a buyer of the dips now? Many traders, they get lost on the green candle. What they're not doing is saying, I want to buy here or I want to buy here. Okay? Meaning the lower part of the channel. But of course, in the future, the lower part of the channel would be that price. So where most newer traders get lost is they see the green candle and now they want to buy. Well, of course, that's not the correct way of doing it. So now I want red candles. And if it drops back to 83.50, I'm probably going to buy. And there's a big difference, right? And the other big difference to that thought process is that it'll probably be tomorrow or late today, like New York close, maybe Asia open. So I'm already thinking about tomorrow. There's a green candle on right now, so it's kind of dead to me. You see, an amateur would look at that and say, oh, now I need to buy it. I look at it and I'm like, well, that's dead to me. Okay, when do these markets tend to move? Well, let's take a look. This blue section is, right, New York. Let me do this in red. Okay, New York open. Well, I suppose it's London open, sorry. New York's opening now. Okay, London open was the bottom. London open was the top. London open was the top, but only for 1, 2, 3, 4, 5 hours. London open was the top. London opens into New York open. It took a while, so London open didn't help there. New Yorkers took it north. Okay? London boys jumped in. New York boys took profit. London boys created the top. New York, it was a shit show. Look at that. Up, down, up, down, up, down, up, down. Brutal. But London rolled into New York. Very cool. London in control took profit in New York. So London shorted, then the New Yorkers shorted, okay? And then they took profit. London shorted, New Yorkers shorted, and then they took profit. Notice a lot of the profit taking is at the end of New York. At the end of New York. At the end of New York. Okay? This one you probably should have been faster. Okay? End of New York, right? End of New York. End of New York. Okay? So you have to time things. And then, so what we've seen in the past, and maybe it'll exist, maybe you'll get one more big candle and then a drop, right? Okay, similar to like a pattern like this. Okay, so it's like it's been up for 1, 2, 3, 4, 5 hours, and now you're interested in buying it. So maybe it goes up for 6, maybe even the 7th hour, and then London closes and it collapses, right? And if you're lucky, you buy here and it collapses. So somewhere around here, you take profit and make money or something. You're like, oh, you're so late that most likely it's more disastrous. And then you pick it up later at the New York close or Asia open, and you take it up, and you'll be long for 7 hours again. See, I want you to be long down here. I want you to be long down here. I don't want you to buy in this zone because it's green candles. No, green candles are people that made decisions yesterday. They're getting paid now for the decision yesterday. Right? So the green candle are people that made the trade at London Open. They're getting paid. So for New Yorkers to jump in now, I would heavily disagree with the decision-making process. I'd rather you say, oh, that looks so good. I'll buy it later. You can't quite see it, so I'll move it north. You're like, I'll buy it later. That's so good. What a great move. I'll buy the dip. Now that I'd rather have you do. Hooah! Hoorah! Oh my lord! It's good, right? That was great. So the orders I use are like that. Or what did I do today? I did Kiwi something. Kiwi dollar. Go ahead, ask my ex-lovers. They'll tell you I'm insane. All right, so this is all that I use. These are the types of orders that I use. So market order or a limit to enter. And then I typically use software, an EA, to enter working orders as a stop or a limit. So right now I have a stop here. I have a limit there. Okay, and that's it. Okay, nothing any more than that. And the way that you do it, just for those that are newer, cancel take profit, Cancel stop loss. All right, so there's my order. Okay, there's my order. You can see it. I just drag it up. There's my stop. Let's say here. And then let's say this is my target. Done. And of course you can adjust this whenever you want. Okay. That's it. Nothing more, nothing less. Now the other way of doing it, of course, I did that manually. Let me kill it. 90% of the time, I use an EA to do that. So I go to my auto stop and I say, give me a 33.99 OCO, let's say. Okay, I can load different versions. I probably have one here. Let's see, load. Scalp 1530, 2020, position and swing. Okay, I'm going to call this a, oh, that's an open. I can save one. I can save this and we'll call this a spot. Okay. Boring little spot trade. Okay. So next time I do this, I can just load a spot trade and it goes 33.99. All right, so I go enter. And when I get a tick, there's the 33 and there's the 99. That's 90% of the time, that's what I do. Okay? And then I can change it and say, well, that's too much for today. That might be a swing trade for later this week. Like, for example, the way I read this chart is that this top predicts that bottom. So it just happens to be this is a proper swing trade. Cool, but what if I just want a day trade? Well, my stop's okay. Okay, so I'm just going to move it here and make it a day trade. And of course, look, if I put it here, okay, the Kiwi dollar has to drop below that line to cover the spread. So when you're shorting, you always want to put your limit order kind of above your target so that it comes down, hits your target, and then bounces up like you thought, but you have to get out, right? It's that plus the spread. So when you're shorting, you always want that exit to be above your actual target. So the bid ask, right? The bid might hit here, but the ask won't. You see, because you're out on the ask and not on the bid. So the bid here, the ask has to drop below your limit. So I always, when I short, I always have it above. Oh, is that right? Because you can click a button and get to break even on all your trades at this, right? Is that? I think this has a similar tool. Close all, break even. No, you can close all, but you can't move them to break even. I gotcha. Okay, does anybody use this tool? This shows you where all the orders are. Yeah, right on, Greg. Yeah, I can see how that's helpful. Yeah, I suppose, especially if you're doing shorter time frame stuff. Longer time frame, it shouldn't really matter, but cool. Was that little tidbit? Thank you, Greg, for the question. Was that helpful to anybody? Just the different ways of entering trades and managing stops and stuff to either do it manually or automatically? Oh, is that right, Lucas? Ugh. You might want to put it on a server, Lucas, a virtual server, because then it runs on the server's machine, not your machine. So you log in remotely. So you don't have to rely on your PC. And it's important for those, like if you're running EAs and stuff, and you want your platform to be up and running all the time. Right on, Andrew. Yeah. I believe Traders Way offers that service. I've used it in other projects, but I don't know why I don't. I mean, I really don't, or I really probably should. Not the empty web. Do they have it? MetaTrader MT5, MT4, MetaTrader for Mac. Maybe they don't. But I think when you download MT4 or MT5, it offers, oh, here it is, VPS hosting service. And, oh, well, there you go. But I think when you sign up and you're downloading MetaTrader and you're setting it up, I think it asks you. And it probably, what is it, $5, $7, $10? I don't know. Okay. By the way, C-Trader, because MetaQuotes dumped all the prop trading firms, if you're interested in prop trading, you might want to get used to C-Trader. And C-Trader is very programmable. It's a little more complicated than many of the simplified platforms out there. But if you intend to use like EAs, if you're going to create trading robots, so to speak, your algos, C-Trader is going to be what you want. And you should probably get familiar with that if you want to be a prop trader, because prop firms do not use MT4 and MT5 anymore. MetaQuotes killed it. Well, if we intend to move to that, because I am going to start a prop trading group, by the way. I'm going to. It's the next project. And it'll be an all-in-one platform, training, fundamentals, technicals, and a funded account. All in one spot. And so if we need to use C-Trader for that, Lucas, then, we'll get those pivot points. All you have to do is add money, and the pivot points get made, right? If we decide to go a different route, depending on the prop funds that we decide to work with and partner with, then I might need to then move everything to trading view, which I think is the better thing to do, right? Well, Frank says, no challenges before you get a live account? Well, why would you want a prop trading account if you can't trade profitably? Doesn't make any sense to me. Give me real money. Why? If you're not profitable, why would you want real money? Seems right. So, like, dude, are you profitable or not? Pretty simple. But I can aid in that. So anyways, I have to go meet with the prop firms in person. I'm in contact with 2 or 3 different prop firms, and I want to go fly out and meet with them. And there's a lot of stuff going on. A lot of stuff going on in the prop fund industry. It's really being redefined, reborn. There's and for some, what that means is there's an extinction cycle going on, and what emerges should be solid and legit. So this is the right time to start. 6 months ago, it was not the right time. Now is the right time. So there's one firm that's actually in the process of moving technology and stuff because of all the changes that just occurred. So. If there's some legitimacy now, and I can help you get, like, let's say $100,000 account, and over the next, let's say, year and a half, we can get that to $1 million, then there's not much in it for me. Quite frankly, there's nothing really in it for me except achieving sort of the mission that I've been trying to achieve for 20 years. I would like to see you succeed, and I'd like to see you thrive, and I'd like us to maintain a relationship for another 20 years and do some bigger and better things than just me logging in every day going, look, a pivot point, look, a 5/8 cross. I'd rather us get together and say, look at my new yellow Lambo, right? So, it's sort of a mission-oriented goal. The part I'm struggling with is when I do the numbers, I actually lose money. So there's a problem with that part. But if I go talk with these groups, and maybe I can set up a different type of relationship with these groups, and I can get my costs down, then at least, I'd like to not lose money. Okay. Tidal Wave says they assume most traders will fail. True. But that's the same of brokers too, right, Tidal Wave? Most Forex brokers want you to lose money. So what most brokers do is you open up an FX account, and here's the interbank, okay? And here's you. And they never execute your orders. Okay? Now, if some other jerk is good and is profitable, they take you out of that pool, okay? And they execute this. Now, you, and it may not be you, but it's somebody else that's called you. Okay, they lose money, and the broker then has them, which is somebody else. So that's you, and then there's them. They also lose money. So they match you to them, okay? And they match them to you, and three out of 2 you lose. 3 out of 2, them loses. And, okay, so how does the broker make money on that? Well, they charge you pips, plus them put in 5 grand. You have a little more resources, so you put in 8 grand. And at some point, you blow up your account. Them blows up their account. And none of the orders from the brokerage firm went to the interbanking system. And the broker keeps 5,000 plus 8,000 plus the pips. And they probably charged you swap too. That's how 90% maybe. And they're laughing all the way to the bank. What a bunch of idiots. And then they're like, wait, what? This guy? He's making money? Oh, snap. And then they just move this over here. And with him, they only make pips and swap, but he might be good and he might demand, give me the swap. And, so they make 1 pip per trade on this good guy. You're like, compared to the losers, it's nothing. So that's why most of right? And some brokers will just say, hey, we don't like the way you trade, get out. And they don't even, right? Maybe there's not even liquidity partners. And this is where traders gets important, because some of the technology in traders has been rejected by brokers. Many, dozens and dozens, because they're on that other model. So really, you might be the good guy and either get kicked out, so from a B book to an A book, and then the A book to the interbank, right? But many brokers might just kick you out. Sorry, Tim, you're breaking our service agreement, terms of service. And you're like, what? What am I breaking? You're profitable. We don't like that. Okay? So that's why you need an ECN like Trader's Way. Okay? Because they only have a process where there's you, okay, straight through processing to the interbanking system. Okay, to the interbank, which is liquidity partner, liquidity partner, liquidity partner, liquidity partner. And then each one of these liquidity partners has sort of a pool, a pool, and a pool. So, all right, and each pool would be like a bank and a bank. Okay, and they match you that way, where your trade, you place a trade straight through processing, which is really fast, to the interbanking system, right? Well, I guess we should go this way, to a liquidity partner, and they've found somebody in one of their pools to match your trade to the other side. So you could be, the person on the other side of you could be Goldman Sachs. And who knows, Goldman Sachs either has a client or they're managing a dark pool. Okay, but here's the thing. If you're B-booked on a typical broker and you stop losing money, they stop making money. With like Trader's Way, they earn an ECN, they earn a commission, right? a commission. And it's very similar to like a spread. They earn a pip, let's say. We'll make it a pip. It might be less than a pip. But it's similar to like non-commissioned Forex brokers. Well, you don't pay a commission, you pay a spread. Whatever. There's a fee. There's always a fee because all of this has cost, right? So anyway, so you pay the commission, and then Traders Way pays for the technology. They pay the license for, let's say, MT4, MT5, and then they pay for liquidity partners. Okay, so they pay, and then they have to pay for customer service. And then maybe at the end of the day, there's money left over. After paying all the employees, whoever owns it maybe makes a penny, right? So, but they need you to trade. Do you understand that? They want you to succeed because if you get bigger, and let's make a bigger you, okay, and that you, okay, so if you get bigger, and then you get bigger because of your success, and you're trading more often, or you're trading bigger lot sizes as your account size grows, their commission goes up and they benefit. As a service provider, they're providing a service to you and you're succeeding, and it benefits them and they're happy. They want to give you a hug, where the other brokers will probably kick you off the platform because there's no money in it for them if you succeed. And this is why I've been recommending Traders Way for 10 years now. It's just our 10-year anniversary, apparently. Wow. Super killer. Yeah. But that's kind of like an overview of just how the industry works. But Tidal Wave says, like with prop firms, they assume you're going to lose money. Yes. So there's a requirement now from the prop firms that survive. There's a requirement now of transparency. One of the new requirements is they have to admit that they're not giving you real money. Do you remember when they said, oh, you could trade $100,000 real money account? It wasn't real money. So they have to do that. Okay? And then I believe another thing that they have to declare is, they have to be honest. They make most of their money from people failing the auditions. Okay? So I think they have to disclose that. Okay? So that's where it goes back to, like somebody said earlier, like, well, you don't have to pass an audition before you get real money. I'm like, what? You're not a profitable trader? Like, it doesn't make sense. If you're not a profitable trader, why would you want real money? Like, so yeah, you got to be a profitable trader. Oh, is there an audition? Dude, there's always an audition. Right? Like, there have been many times in which a client's like, I want to give you money. Great. But I only want to give you $100,000 now, and you play with this account, and then I'll put in the rest. So they might say, hey, I have $2 million for you. I'm like, oh, cool. That's interesting. And then they're like, but I only want to give you $100,000 now. It's an audition, bro. Of course there's an audition. They want to see your track record, and they want to see your capabilities. There's always an audition. And usually you're talking to the client, so they got to like your face, they got to like your clothes, they got to like the way you talk and the way you walk. and they got to like your track record. And there's still going to be an addition. And back when I was like doing a VC, and then even back when I was a high-tech entrepreneur, I've helped startup CEOs raise millions of dollars from investors, both angels and venture capitalists, right? And it's always the same thing. They're like, I'll give you $3 million, right? They're like, okay, we'll put in 3M. But, and there's always a but there's milestone 1. There's milestone 2, milestone 3. So, for example, you hire three engineers. Okay, and then we'll give you $500K. And then the second one is you get 3 referenceable accounts, name brand accounts that are going to test your service. And then, right, so, and if you can do that, we'll give you 1M. And then next one, you earn $500K in revenue. Don't worry about profitability, but you get somebody to pay you money. We'll put in the 1.5 so that then we can talk about new milestones. There's always an audition. So if you can't trade, the only thing you're going to do is get more poor, right? Yeah, Tidal Wave says, I'm a bit skeptical of them being able to honor large withdrawals. Sure. You should be skeptical. Okay. But like if that crew, so there's a crew that I'm going to go talk to. I plan on flying out and meeting with them in person. They claim to have paid out to their traders $100 million in payouts. Okay, cool. That's a lot of money. So if they're lying, they go to jail in the United States. So let's go talk to them. Show me the money, honey. Let's see what you got. Let's look under the hood. I was going to say dress, but let's see what you got. And if they are liars, we call the NFA, we call the CFTC, we call the SEC. Remember my MIT professor was Gary Gensler. He runs the SEC. I can call him up. GG. Came across a scam. They go after them with the FBI, right? Side by side. FBI shows up. Quick little raid and those people go to jail. So it's highly unlikely that they would be bullshitting at that level. But if they paid out $100 million, okay? So it'd be cool, wouldn't it be, Tidal Wave, to find proof? So I go to the office and I'm like, show me proof. Just show me some proof. And they're like, oh, well, here's 20,000 to a trader. Here's 25,000 to a trader. Here's 30,000 to a trader. Here's 40,000 to a trader. Sweet. Good. Got it. But I would be able to do stuff like that, like have that kind of leverage to go meet with them, go to their office, you know? So anyways, that's that. That's that, right? Yeah, well, that's the risk I take, right? But look, honestly, if I'm being lied to and then there's criminal action and they go to jail, then I'm a victim, not not whatever, right? I'm a victim too. But whatever, right? All right. All right. All right. All I can do is the best due diligence I can. All right, well, I guess I got to go because the market's opening pretty soon. Should be another interesting day in the market. No news. Look at all this capitulation. Just, okay. But it's okay on this time frame, but I am definitely losing patience. I am definitely watching and watching and waiting for the hedge. We're riding 21. No higher high, riding the 21, no higher high, riding the 21, no higher high, riding the 21, no higher high. Yeah, the longer it does this, the more risk shows up. Look at the volatility, huh? On the no diggity, no Dow. Zoom in here. And came down. M2 is the bottom. And we are on our way to Dow 40,000, huh? It actually says Dow 39,000. Actually, 39,700. 39,750. That's what's in play now. Doesn't mean we'll get there. That's what's in play. This 39,140 is where bears would show up, but they've had two chances, a lower low. What the heck are we doing back up here if it's bearish? So again, what's in play is probably on our way to Dow 40,000. Was that good? Was that a good hour of power? Actually, it's been almost an hour and a half. Is that okay? Did we all do all right? Okay. But this one last comment that I noticed tidal waves, the business model for prop firms is the challenges. What if my group, I give you the coaching, the fundamental tools, the technical tools, and I pay for your trading account? We just bypass the idea that they make all their money on their challenges. Cool. Has nothing to do with me. I don't care. They're making money by other traders failing. Doesn't bother me. Doesn't hurt me in the slightest. Doesn't hurt you. We don't care. You're going to pass. And then every single day, you're going to trade properly. And you're going to make money. Cool. Whatever. And if prop firms are making money by, I don't know, get rich quick type people, that has nothing to do with me. I'm not part of that business model. Never have. I'm not really interested in that. But whatever. And so if that's where they're making all their money and they're paying you with that money, who cares? What do you care? I want to see you pull out $2, $3, $4, $5 a month. Maybe and more, like whatever. Like, dude, whatever. As long as they're legitimate and they're paying you, you're profitable, and they're paying you from your profits. Do you care if it's from profits from the interbanking system or profits from traders failing their auditions? Do you care? All you know is you're like, hey man, I'd like to withdraw $3,000 this week. Boom. All right, here's $3,000. Cool. Then you take the $3,000, pop it into your Trader's Way account, and copy trade. Never spend the money. And then trade the prop firm again. Keep doing it. And 2 weeks later, take out another $3,000. Pop that in your Trader's Way account. Copy trade. Have a goal of growing that account, and you rely less and less and less on the prop fund, and you're funding your other account, your real account, your personal account. You're funding that with the prop firm money. That's what I would do if I was me. I would never spend the profits. But you got to withdraw it from the prop fund because you don't know. Maybe there's a change in leadership. Maybe they go out of business. Maybe they get shut down. But you're like, oh, thank God I popped $30,000 into my Trader's Way account. Okay? That's what I would do if I was me. Okay? So what would you do if you were you? Peace on earth. May the pips be with you. May your profits be above average. Love you, babe. Got it.